investmentstrategy.com.
Hello, this is Daniel Grady with a brief look at the markets for today, Thursday, October 17th. Of course, the major news for today was the resolution of the debt ceiling debate in Washington, but we'll get into that in a second. Looking forward today, starting at 8:30 GMT, we have retail sales coming out in the United Kingdom. And later at 12:30, the United States initial jobless claims, which both of these events could have an important impact on the market. Moving over to the markets, we'll go back to the debt resolution. At more or less the middle of the American session, Congress announced that they had reached an agreement to resolve the debt issue. So this gave the market an opportunity to already start to react to the news, even though the actual deal wasn't passed through Congress and signed and passed into law until early this morning. So the market expected, and most investors expected, there to be some form of relief rally following the announcement. And since the deal mostly just pushed this problem forward a few months, we could be expecting that the relief rally will be relatively muted. Also, there's been expectations all week that a deal would be reached, so a lot of the pressure has been released. Okay, so also, which is typical for a relief rally, is that you have a brief movement upwards, and then this is followed by a short-term correction. The market is already trading very close to record highs. This is the record high for that is achieved to date. This was following the Fed announcement of no tapering, that there would be no tapering for the month of October. And there was a relief rally and almost immediately followed by a downturn. So what we could be looking at is a similar situation here in the markets. The question is whether the relief rally has already happened and we're looking at the correction, or there's more room for a rally during the rest of the session. Something indicative of this would be that Nikkei rose only 0.7% over the Asian session, and Asian markets did not respond too extremely well. They rose across the board, of course, and also futures for the European session are trading up, but they're not trading up significantly. They're not trading above 1%. And Market Outlook, a survey done by the Wall Street Journal, is showing that actually 70% of traders are expecting the Dow Jones to go down in the session, whereas 68% of traders are expecting the S&P 500, which is what we're looking at now, they expect it to go up. So we're looking at possibly the end of the the end of a relief rally and the possible correction that's going to happen immediately afterwards. Moving over to the euro, the euro has been trading within this range of 135 and 1370 and hasn't been able to break out of it. There is not much news expected on the euro side, and we're looking at general weakness in the dollar as the market adjusts to the news announced yesterday. In terms of the Japanese yen, this could have an important movement in response to yesterday, with the reduction of uncertainty in the United States and general risk-on movement in the market. There's more opportunities for carry trades. And as a matter of fact, the Deutsche Bank carry trade index jumped 0.5%, which is a strong move. I think it's the strongest move so far this year, which means there's a lot of interest in using carry trades, and the Japanese yen is favorite for carry trades. So this would mean that we'd have increased Japanese yen strength. And this would mean this pair would probably push further down during the session. We have an important support level here at 98.30. If it breaks through there, it could traverse further down to this other support level at 98.10. The pound has also had a somewhat surprising movement. Yesterday there was really good news from the jobless claims in the United Kingdom. However, it failed to push the market failed to push the pound higher significantly. The pound has been stuck behind the 1.6 level, and it's had a lot of difficulty moving forward. Also, the retail sales expected to be announced at 8:30 could also expected to be pretty positive, and this would push the pound to challenge this level again. We're kind of hoping that this pair will return to this trend that it's been maintaining since June, because that makes it easier to predict where the market's going. But this will all depend whether it's able to reach this level. And another paradoxical movement in the markets is with gold. Gold actually rose very little, but it was a positive rise yesterday following the announcement in Washington. And this is somewhat paradoxical because gold does not have any yield. Whereas with the uncertainty removed from the dollar, we expect investors not to be looking for a safe haven, which is what gold is. So this might actually be just a brief short-term correction before this commodity reaches this trend line and continues to go down again. And that's it for today. Thanks for watching and happy trading.